This is Dez here at Grok Trade. It's Thursday, December 5th, 2013. Let's get after it. Man, markets down. They had S&P and Dow down for the fifth straight day. Both of them down, as you can see here, 0.43%. Nasdaq down 0.12%. Russell's tick higher. Small caps up 0.10%, with the banks up a mere fraction. But fear increases yet again, up 2.6%, now over 15. We were down in the 12s just days ago. Gold off by 1.38% after yesterday's big rally. Silver off by 1.63%. And you have crude oil up a fraction, with US dollar down a 0.5%. You'll see here that utilities, defensive sector, down almost a full percent. Here we are looking at the big rising wedge on the S&P 500. We have a nice little bull pullback. Yesterday we had this doji, looked for an upside potential, and it would be weak if we did not get that. And sure enough, today we went bearish. And we are decisively now below 1800, and we did close below the 20-day moving average. Although after you get a 5-day rally or downside move and you have a little support right here, you'll see that we're finding support there. There could be some buying opportunities at 1780. Look for a bounce, but I think it's going to be a short-lived bounce. We have this big rising wedge, bearish divergence on the MACD. There's our breakdown. It can only get worse from here. On the weekly chart, though, the benefit that we have, we're at big-time support. You see here we had resistance, resistance, resistance. Now broken becomes support. We're at support. So that is an opportunity for the markets to actually go bullish, and that I would foresee that happening here on the daily chart. This is the Dow. The Dow big drop. We had a close yesterday below the 20-day moving average, and it continues southbound with a big divergence here on the MACD, the weekly chart. You'll see we had this big run, hit resistance, and now dropping. The Nasdaq, we are now in a tighter rising wedge formation. We did not hit the blue line up here. This swing high failed to hit that. That is relative weakness. We did drop, and we stalling down here at the EMA's exponential moving averages, threatening to drop down below this rising wedge, which would be a breakdown off of a bearish chart formation with the MACD divergence. The weekly chart, we're at resistance, so it wouldn't surprise us if we do see a drop in technicals. And if you look here at gold, we have a falling wedge. Look for an upside break. We have a bullish divergence on the daily chart. The weekly chart, we're at a big area of support. We're right there now, so be looking for buying opportunities here on gold. However, in December, the Fed should be starting to unwind its stimulus, and that will just kill precious metals and the market for a while. Silver on the daily chart, falling wedge, look for a buying opportunity pop, and we're at a support level on the weekly chart. We have some resistance to get through if it's going to do that. Apple is did go higher, but look at this. This is a bearish thrusting pattern. This could start heading south, so be careful with it. On the weekly chart, nothing to speak of really on that. Facebook daily, we had a symmetrical triangle, boom, breakout. We're still caught up in the moving averages, but look for upside potential. If you look here at a weekly chart, big bull pullback to the rising 20-day moving average. Look at that, dude. It's ready to go. Google, kind of a rising wedge. Just be careful with Google. Looks pretty bearish to me. LinkedIn, symmetrical triangle breakout just happened today, the weekly chart. The problem is it can't get off this support level. Even though it's at a support level, it should have did this touch and go. This white candlestick should have continued higher. It didn't do that. It's just fizzling out. Be careful if you're in LinkedIn. Microsoft sold off by 2.4% today. This here is what happened. We had a rising wedge. We did break down. Buying came in on that weakness, but we still, gang, closed below a big trend line. That's problematic. So look for downside potential. Rising wedge with the bearish divergence. A lot of weakness there. We're very extended on the weekly chart, so I think we're going to give some of this back. Twitter here was up a nice 4.42%. Now we're over the IPO price of $45. So had a nice run the last couple days. And let's see how our bull list did. Wow, we had one that went up 19.4% on our bull list picks. Boom, our V newsletter, very strong on that one. Nice earnings. Away was up 3.3%. I mean, wow, we were down here at $28. Now we're almost at $40. Really strong. Celgin, we were back down here at 135. We're at 164 now. Nice bull pullback pop. Boom, to the upside. However, today was a bearish day. Let's see, Zooms was down 3.85%. This is one on our bear pick. We were around $31. Now we're at $26. AEM, we were up here around $32, $31. Now we're at $25. It's down 3% today. MDP was another bearish pick. It has a lot of downside potential still in this one. Wow. So a lot of bearish plays. Also, well, you get the best technical analysis right here at Grok Trade. And we are talking about doing a program this Monday night. So if you can record Monday Night Football and join us for a free monthly program, we're going to be doing a free class. Hope you can join us. More details on that soon. Catch you later.